Welcome to this week's Weekly Market Roundup here on the Rural Radio Network. I'm Alex Makovica. We're going to break down factors influencing this week's commodity trade on the livestock and grain side. And before we do that, we're going to get a message from our sponsor, the Nebraska Soybean Board. And right after the break, we will break down what's influencing this week's markets.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
All right. Thanks to our sponsors, the Nebraska Soybean Board, for the Weekly Market Roundup. We're going to join in on this conversation. Shawn Hackett with Hackett Financial Advisors and Don Roose of U.S. Commodities to break things down. Gentlemen, let's start 30,000 foot perspective. Just recap the week a little bit. Shawn, let's start with you. Talk about some of the big things impacting trade this week.
I think we went into the week with all this macro uncertainty and pressure. The stock market having schisms, the bond market having schisms, and forcing a lot of long liquidation in commodities in general. And then I think we're ending the week with the idea that we're seeing or hearing about some softening, maybe some trade deals with some countries. China might be suggesting a softening, and we're seeing a little bit of action in the grains at the end of the week. So I think this week has really been all about macro forces than much anything else up to this point.
Absolutely. Thanks for that insight. Don, as you see the week, recapping it, what do you think are some of the big things that stuck out? And we'll dive into those.
Well, I think when you look at the cattle market, first of all, it's one of the biggest bull markets in history. You always have to be careful with the cattle market when you're, we're well positioned. Everybody is pushing to the upside from a fund standpoint. But you've got some warning signs up here. One, it's all about the demand going forward. When does the consumer, particularly with these tariffs, particularly with the economy maybe slowing down, when does he slow down? Weights on cattle about 34 pounds over a year ago. Packers losing about $110 a head. So grilling season is squarely ahead of us. And, do we grill more pork versus beef? So I think it's going to be that flip-flop back and forth.
Yeah, some questions we will absolutely explore here in a couple of minutes. Well, let's break down the grain trade this week, Shawn. Planting, the weather finally kind of making the headlines in trade as opposed to what we saw just a couple of weeks ago when all this news about tariffs came out. Let's start there. Planting weather, what do we expect to see? What do the commodities need to see to maybe get some stronger prices here?
Certainly, I think if we can get the macro picture off the table for a little while, we can focus back on weather. And what I think there's two things that are always important about following planting intentions, planting progress, is how wet it is and how cold it is. Obviously, we've had a lot of wet weather to the east that's been slowing down planting, a lot of dry weather to the west that's actually been accelerating planting. We're worried the most about a potential late spring, May hard freeze. We think the variables are in place for that to have a higher order risk than normal. And if that were to occur with a lot of planting progress getting underway, we could see that be a significant catalyst to shifting to a late planted crop, maybe less corn acres than many are thinking. And obviously winter wheat would be in the crosshairs like it was last year when Russia-Ukraine had a May hard freeze. So I think that's going to be what we're focused on, what we are focused on, and hopefully the market will take its cues from that.
That 95.3 million acres has obviously been something in the headlines for a long time now, with corn planting ahead of pace, at least according to the latest update. We'll obviously get some later information coming up on Monday, but do you see that coming to fruition with even more corn acres? Should people continue that planting pace?
We're really doubtful that the fringe acres that you need to have planted to get to that 95, 96. I think only one other year we've ever planted this much before. I think it was 2012, if I remember correctly. I just don't think we're going to get it done. I don't think we're going to get all those acres in the fringe planted, especially if we have enough challenging weather to make different decisions on the farm. A lot of anhydrous did not get put down last fall because of the dry weather. And so although we're going to plant a lot of corn acres, I think we're too optimistic on what that looks like when the June acreage report comes out at the end of the month, of that month.
Mm-hmm. All right, another timely thing happening this time of year. Don, let's bring you into this conversation now. We are talking about seasonal demand for these meats. Especially, we've got two major holidays coming up. We've got Mother's Day followed back to back by Memorial Day. Uh, with with these livestock seeing how high is high, as you put it, I mean, they have seen some phenomenal trade recently. How do you shape up that market, Don?
Well, I think you have to look for some warning signs, and I think that's, yeah, each weekend do we sell the beef? Like we always say, if you don't sell it, you smell it. And I think this is a market that is a long running bull market. It's going to be led by the cash market, but really watch the box beef when that starts to slow down. You've got some. Usually a bull cattle market, what happens is when the packer starts to back away, they're losing about $110 a head right now. When they start to back away, the feedlot starts to slow down his sale. And the weights, when they're, like we said, 34 pounds over a year ago on the carcass weights. And our cattle on feed numbers are down 2%, but our slaughter is down 5% so far. So that means you're in the early caution that you're starting to back up some cattle. So that's a warning sign. I think we're in the final phase of the big bull market. It's just a matter of, I think it's going to be a short order before we hit the tops in here.
Mhm. Yeah, we saw cash cattle last week jump over $7. Is that something that is sustainable here at least for another week, or how do you shape up a cash trade here in the next couple of weeks or so?
Well, the Packers losing money, and we've got some Packers, some major ones that are going to cut kills here the next 2 to 3 weeks, 32 hours versus 40. So you've got some warning signs out here. So, it's a matter of the Packer versus the feedlot. Feedlot's winning now, but ultimately the Packer usually wins.
All right. We are in the weekly market roundup program brought to you by the Nebraska Soybean Board. Shawn Hackett with Hackett Financial Advisors joins us along with Don Roose of U.S. Commodities. Shawn, you had also mentioned renewable diesel mandates, especially when it comes to the soybean complex. Talk about the movement, the news you've seen on that front, Shawn.
Well, if you remember, several years ago, they were supposed to increase the mandate, and somehow that didn't happen. And it set off a significant overestimation of demand for bean oil and for the need for crushing soybeans and such. But it does look like that the big oil companies are getting together with the refinery companies to push for a big increase from 3.3 billion gallons up to over 5. This would be huge because we're not going to plant a lot of soybean acres this year based on weak demand. And if we get that kind of a mandate increase, then the crush demand that we're going to need domestically is underestimated, with acres being very low. And the trade tariff war situation is also likely to limit those imported used cooking palm oil supplies that have largely supplanted bean oil in terms of the feedstock for making the current renewable diesel mandates. It's a big, big change that potentially could come non-weather related. And, everyone's been very negative, the soybean market here relative to corn and relative to other markets. This could be the surprise market to watch if this happens. And we may be significantly undervalued given what I've just mentioned. So I think that could be a huge driver, not just for soybeans, but just for the entire grain trade globally, and what needs to get planted and what's not getting planted now.
You bring up a great point. The U.S. China trade tensions have just gone back and forth. It seems like every day there's something new. It may not directly impact commodity trade, but bring us up to speed on where those conversations perhaps might be and how that is impacting the ag space, Shawn.
Well, I mean, from what we're being told, and I'm sure what we're being told isn't exactly the truth because a lot of it happens behind closed doors, but from what it seems that we're getting a softening. Trump is softening his rhetoric. China is softening. They're talking about exemptions of certain products. It just seems to me that when we've had the stock market schism, especially the bond market schism, it really scared, I think, both China and the U.S. into maybe softening this tariff war. And so it looks like we're moving to something that's going to be a little less caustic than we've been in. And I do think some type of an agreement, a new arrangement. It may not mean no tariffs at all, but I think it's going to mean something less negative than we've been worried about. And on that front, if that happens or anything remotely close to that happens, it should be positive for the grain trade, given how dark many have been about the outlook for U.S. grain trade based upon all this worry that we've had. So I'm encouraged that we might see a better outcome to that than we were thinking maybe just a few weeks ago.
Don, let's kind of shape up that same situation for you. Of course, these trade tensions impacting the livestock side of things, specifically when it comes to pork, is kind of the main thing we think about. What do you see that shaping up trade as this week, Don?
Well, I think, like Shawn said, the tariffs at these levels are just unsustainable. Both China and the U.S. said the same thing. So I think it's just logical that over time, the shelves are going to be more empty than full in both the U.S. and China going forward if something doesn't get resolved soon. So I think when you look at it from that standpoint, the dollar is also starting to find some strength. So that's a big plus. But on the pork specifically, China did sent more negative signals, canceled yesterday afternoon some pork exports. So still on the negative side from that standpoint. But seasonally, when you look at the hogs, the hog market seasonally this time of year usually finds some strength. The numbers are down. The pork in cold storage was down 9% versus a year ago on the March report, and belly's down 26%. So if we get much of a demand, there's some support underneath the market.
All right, let's round out our conversation, gentlemen. Thoughts about heading into this next trading week and what producers need to be thinking about. Don, what comes to mind for you?
Well, I think when you look at the cattle market, don't overstate your position. We'll see what cattle trades this week, but watch the demand side of the market and watch the seasonalities. But keep current on cattle would be my advice. And the hogs, look for some upside potential seasonally.
All right, Shawn, what about you? Lasting thoughts for the week and what producers need to be thinking about?
Watch weather. We would specifically watch weather in Russia, Ukraine next week. A very significant cold air mass is expected to come in like it did last year. Some of the models are showing it could be a hard freeze like what happened last year. And so it could be the spark that maybe catches the market off guard and lets a lot of these short speculators that have been piling on from the tariff war and other things need to cover some of those shorts. I really think Russia-Ukraine weather is the focal point for at least the next week.
All right, gentlemen, appreciate the insight as always. Thanks so much for joining us. Shawn Hackett with Hackett Financial Advisors and Don Roose of U.S. Commodities joining us for this week's Weekly Market Roundup program, of course, brought to you by Nebraska soybean farmers and their checkoff. For the Rural Radio Network, I'm Alex Makovica.